Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you haven't, and just remember the disclaimer nothing should be construed as financial investment advice. Just my opinions and thoughts on the market. Read more below. And let's get into today's stuff. I just want to do a quick video. I went to my email box. Literally had nothing. I did do a video a couple of days ago. You all didn't see it because it failed to upload. And it failed to download actually. So I actually had a lot of good stuff, but it ended up not going. I wish I could find it, but this you should like this video. So let's go into stuff. First thing I wanted to go into, well, we can go into gold later. Go into gold later. So looking at the markets, the fear and greed index, a lot of fear. 1 week ago, neutral, fear. A lot of fear. So I think that means generally that there should be somewhat of a sell-off. I don't think it will be a massive sell-off. I don't think this is a crash. I think, oh yeah, we'll talk about that too. The Fed, I think they're going to lower rates even more. Right now, they just haven't had any. The thing is, the Fed also says they're data dependent, which shows they have no forward thinking in them. But if they're data dependent and there's no data, this is what's driving the fear. So I think whenever they end the shutdown, I'd like to see what this would happen. Of course, I don't know when the shutdown's gonna even end. No one knows. Because I think they're using the shutdown to do things they want to do. I mean, the Trump administration. So I don't know when it's gonna end. So whenever it ends, that's when it's gonna end. Who knows? But I think the Fed is going to cut rates even more. Let's see this. Jerome Powell. I looked up Jerome Powell as the Joker. I just looked this up real quick. Images. Divided 1 month. They didn't really. So yeah, I don't know. Here it is, Investopedia. Fed officials are willing to cut rates, but inflation could derail their plans. I actually think that's going to happen. They're going to cut more and more, but I think the inflation's going to get up much higher. I do think one of the reasons they shut down the government was so they don't have to report. I think they've cooked the books so much over the years, meaning since '08, really. I mean, I think they've cooked the books so much that they can't cook them anymore. And so I mean, that's just my opinion, not investment advice or anything. So, but I think the Fed, I think there are a lot more rate cuts coming. Uh, let's get into the actual economy that's going on. And this is going to get worse, especially with the layoffs. Close to 1 million people laid off. That's going to hurt, whether you agree with government work or not. Doesn't matter. That's a lot of jobs being lost. These are good paying jobs, probably. And a lot more defaults are coming. So as of October 12th, 2025, auto loan defaults are rising. So here it is. As of September 2025, report from the Consumer Federation of America, Lawrence auto defaults and repossessions are surging. Not increasing, surging. Uh, Look at this record subprime default. Subprime auto loan delinquencies 60 days hit a record in 2025, 6%. So look at this 12% increase of high delinquency rates since 2024, September. It's not at 5%, but still. Look at this increased repossessions, number of vehicles reached 1.73 million, the highest since 2009. So obviously, we know what did this. I'll give it a like. So let's get into this. Is very interesting. I talk about these bubbles, and they're going to really hurt. Credit card delinquency rates remain stable, but remain at 10-year historical highs. Serious delinquency was steady. So after several quarters of increases, they're leveled off, though charge-offs are expected to remain high through the end of the year. So charge-offs, auto loans, we went over those. Auto loans for used and subprimes are at the highest delinquency rates. Student loans, this has experienced the most dramatic swift delinquency surging following the resumptions of payments. Balances are transitioning into serious delinquency. And that's the thing, this affects the credit score. So people are going to be borrowing less. Mortgage rates have increased, though overall remain as relatively low historically. Cost significant pressure is seen in commercial-backed securities, particularly for office buildings. So you're seeing the commercial real estate bubble, and then foreclosure activity, including starts and banks repossession, saw an annual increase in the third quarter. So they say it's low for historical averages, but it's increasing. And these are really increasing: auto, credit cards, student loans. Now, my question is residential mortgages, and not only that, commercial real estate. So do you think residential is going to buck the trend and be low delinquency and whatever? Or are they going to probably follow the same path as commercial, student loans, auto loans, credit card? Yeah, I think they're probably so. Anyway, yeah, you can see delinquencies. And look at this. Let's see, corporate bankruptcies. This 20 as of October 12th, 2025. Let me see what they say about corporate bankruptcies. Oh, yes, corporate bankruptcies have continued to rise in 2025, reaching their highest level since 2010. So there it is. Look at this. Elevated inflation, borrowing cost. With elevated borrowing cost, bankrupting corporations, do you think the Fed's going to cut or stay the same? Do you think the Fed is going to, help the corporations, or say, sorry, Wall Street, you're just going to have to go bankrupt? Highest filings in over a decade. 446 large corporate bankruptcies have been filed. Mega bankruptcies are surging. Filings from companies with over 1 billion in reported assets. Mid-year filings confirm uptrend. Commercial filings up in September. See bankruptcies increasing 13% compared to this time last year. 78% year-over-year increase in Chapter 11 and 26% in the rise of commercial. Now, Chapter 11 is, I'm not a bankruptcy attorney or advisor or anything. My understanding, it doesn't mean the company's going out of business. It's just a restructuring process. And so what they do is they wipe out all the assets, but they wipe out all the debt too, and they restructure. But the thing is, they owed money to someone. They were in levered debt. And so someone who had that as an asset is losing money. So Chapter 11 is still a big deal, even though it is. Look at this. Prominent names filing. Riot Aid, Forever 21, and Hooters. Look at this. Manufacturing sees high share. Many companies citing regulatory and policy distress. So anyway, there you go. Corporate bankruptcies are on the rise. So you think residential real estate bankruptcies are just going to be, completely separate from this, completely bifurcated? Or do you think maybe they're going to join the auto, credit, and all the other loans? I think I don't know, but we'll see. Well, basically, so I did this what am I buying? And anyway, let's go into the only thing, this is not investment advice, but the only thing is what I'm trying to do is do a dividend stock portfolio. And if you look at oil, 57.84, I think this is WTI, West Texas crude. If you look at it, this is way below on a year to date. Wow, up 5 years, up six. If you look at it on a chart, though, it is really, even on a 5 year, look at this was at $115 in May 27th of 2022. So if you look at it, it is just on a down. It's a value trend. It could go down to 40 or 30, but I think the spigots for a lot of U.S. companies will come off. They will not be selling anymore. So oil price right now, and if you look at it compared to like S&P 500 uh, index, even if you look at the futures, just looking at it on a 5 year, that's way up. So I like that to come down a lot. I'm not buying any gold or silver miners right now because if you look at it, just this is way up. Like on a year-to-date basis, gold's up 51% on a year-to-date basis. 1 year, look at that 5 year. It's just, in fact, I've actually, not investment advice, just what I do. Trailing stops on some of mine for now because I'm like, don't want to lose a lot of profits, and that's what I do. I just put some trailing stops on some. I don't think this is the top, but could be wrong. I mean, I'm not a panacea. So anyway, is this, gold's up in the future. So look at the silver chart. Let's see what we can find. Let's do an all. So if you really look at this, this was in 1980. It's around 48, 49. Comes up, makes a double top, 49. And I think this is at 50 now. I think silver's ready to break out. And I think it's going to go up more and more. But the thing is, you never know. It could just cup and then handle for a couple of years and then break the 50. But I mean, this isn't, in my opinion, a cup and handle because it's supposed to go like that. But that, I just have a hard time believing. Look at it at the 5 year. But if you look at the 5 year, they really based a little bit. So this is really, I mean, it's not like if you look at it, if you look at this from like 2008, it went up to 30, but it really, like, that's a straight line. That's a straight line. And so, I mean, if you look at it, that's just a straight line. But look at this on the long-term chart. This is from 35, it's gone up. So I don't know exactly, but if you look at this, if you look at this 50 here, this is just basically a straight line. But here there's some base and then there's some base here. So it's really starting from 34. The last 50 start from like 19. So we'll see what happens. I'm not a financial advisor. I have some trailing stops in some of my companies. In fact, I was actually stopped out of one on Friday. So still got a couple of more though, and we'll see what happens. In terms of, I think it will break out event. I think it will break out. If it breaks out, I think it will go to like 65, 70 or 75. I don't know exactly, and who knows where gold goes. But I think that will be it for the next couple of years. You look at gold. Gold is around 4,000. And I think if it stays around 4,000 for a while, this is another reason it will break out again. Now, I think if silver breaks above 50 and gold breaks 40, it's going to go, up a lot. I don't know if parabolic, but then after that, I think it will be in not a long term, but like a multi-year correction. I don't know exactly how long. But if you look at gold, let's do a 5 year. And if you look at it, this is not like the others. If you look at it, it came here. It based around 2000 for a while. Like 2022, finally broke out. And then it sort of based here in terms of time from April to May. And then it did another breakout. And then from October to February, it sort of based here and then broke out. And then from April all the way to August, a couple of months, broke out. So I wouldn't be surprised if it based here another couple of months and then just broke out. Or maybe it's 4,000 is psychological. If it stays there, maybe it'll be with silver going for another breakout. They'll get a really straight line. That's the only thing I worry about. There's a straight line there. That's a straight line. I've seen that on a chart before. Now on a 1 year, it doesn't look like a complete up. On a year to date, it doesn't look like a complete upstart. On this looks like, but look at this. Looks like a 1 year, but there's a little basing here. So we'll see what happens. Whoa, 870. So, but it's above 4,000. Look at silver. I think if it bases above 50. But stock market, who knows? But just remember, nothing should be construed as financial investment advice. These are just my opinions, thoughts on the market. My opinion is be nimble, be cautious, be alert. Because, yeah, there's a lot of excitement, there's a lot of euphoria, but that's generally a sign of a top. And even if this isn't a top per se, I've been in bear markets before. They are not pretty and they are not for the faint of heart. So remember, nothing should be construed as financial investment advice. Just my opinions, my thoughts. I'll see you next video.